Good evening, everyone. Welcome to this special Farmers Weekly webinar on coronavirus and its impact on farming businesses in partnership with accountancy firm Baldwins. My name is Andrew Meredith. I'm Deputy Business Editor, and I've been with Farmers Weekly for almost 4 years now, having previously been a livestock farmer in Mid Wales. It's approaching 6 months since most of us first heard the word coronavirus, and so much has changed since then. Personally speaking, I've never felt more contrast between my life here in London and my previous countryside existence, where I know for many of you folk, even if life has changed dramatically, the work has gone on something like normal. However, despite being restricted to the confines of my flat, like many other journalists and London workers, and of course the streets and the parks around it, there's been many farming stories to tell from across the country as we've all grappled with tumbling prices and swathes of new legislation and support schemes. The period of extreme price volatility in finished livestock and other commodities does appear to be coming to an end, with beef prices now even above pre-coronavirus levels and milk prices improving week by week, just to give two examples. However, like with so many parts of the economy, the damage that was inflicted during the downturn may take longer to recover from, with public-facing farming diversified businesses perhaps the most affected segment within agriculture. Now, therefore, seems to be the right time to take stock of the situation and look ahead, hopefully, to a rapidly declining infection rate and economic recovery. I'm delighted to be joined on the line for this stock-taking task by an extremely talented cast of agricultural professionals who've given up their time this evening to share their knowledge. From Baldwins, we have Rob Buse, who is Director of Banking and Finance, and Rachel Ball, a tax specialist. We have Martin Baisley, a diversified Hampshire farmer with brewing and self-storage enterprises. And from the law firm Thrings, we have one of their partners, Caroline Watson, who is a specialist in insurance matters. And from Carter Jonas, we have James Stephen, who heads up their Southwest rural team in Taunton in Somerset there, and specialises in land and tenancy matters, as well as planning and diversification issues. The format of this evening will be some short opening remarks from each of our panellists before a wide-ranging discussion between themselves and you. This will be as interactive as possible, and they're looking forward to answering your questions on anything related to farm business management, government support packages, and tax, insurance, and legal matters. Questions can be submitted at any time by typing in your query in the Ask a Question box, and I will direct them to our speakers. We'll also be running 4 polls over the next half an hour and be discussing the results thereafter, so please do submit your answers to them when they pop up on your screen. The whole webinar will be concluding at 6 p.m. on the dot, and afterwards we will email all attendees a recording of the webinar, and there will be an opportunity for our speakers to answer any questions that there was no time to address. Without further ado, therefore, I will now hand over to our first panellist, Rob Buse, to give his opening remarks.
Thank you, Andrew. As you've already stated, I'm Director of Banking and Finance for Baldwins National Accountancy firm. Some people might find it funny that I'm a banker and not an accountant working for an accounts firm, but I believe the way the financial world is going, that the traditional bank manager is a dying breed unless you're borrowing excessive monies. And I believe, dare I say, me or my role is the future that they're going into. I've worked in the high street banking for over 30 years, and I'm a dairy farmer's son from North Devon. Looking forward to some challenging questions on finance, I expect. I'll hand you over.
Thanks, Rob. My name is Rachel Ball. I'm an Associate Director for Baldwins. As Andrew mentioned, I'm a tax specialist. We are a firm of accountants, but we're also advisors, and we have people such as Rob in our team. We are a national firm, and this gives us the UK presence, but with the local knowledge. We have over 4,000 agricultural clients, and many of our specialist team within the agricultural sector are actually from farming backgrounds themselves. So let me know any of your tax questions, and we'll have a look at those after.
Hi, I'm Martin Baisley. I'm a dairy and arable farmer on a privately owned estate on the south coast, just north of Portsmouth. I started diversifying in 2000 with the launch of Southwick Ales, which is a small beer brand. It's brewed from Southwick barley that we grow on the chalk on top of Portsdown Hill. 2003, I started Barnstore, which is a self-storage enterprise based in an underutilized dairy building, having amalgamated 2 dairy herds. And I started to franchise that to other farmers in 2005, who've all taken up the Barnstore brand. There are 16 franchisees now across the country, with 1 or 2 more in the pipeline. And they've established their Barnstore businesses in anything from a chicken broiler house to beef sheds to all sorts, really. And in addition, we have a small beer shop that's based in a Victorian steam brew house in the village of Southwick, where we sell our real ale and lots of other beers as well. My one daughter and son-in-law have started a specialist car storage business in some buildings on the farm next door, and the other daughter a fitness studio, which is about to open as soon as restrictions allow. But my main focus through all of this has been marketing our way through the coronavirus and making sure that we come out at the other end as a business that's fit for doing business and not looking like a business that it's all got on top of. So that's my background, and my thrust is making sure that we can come out of this in a positive way.
Thank you, Martin. My name's James Stephen. I am a partner in a national property consultancy called Carter Jonas. I head up our Southwest rural team, and I've been based in the Southwest since 1989, originally working in a firm called All the King Rural Surveyors, which was a livestock marketing and professional business. So I'm quite familiar with the impacts of disease on certain businesses such as BSE and foot and mouth, and the impact that had on livestock businesses. Then became a partner in Druitt Neat, and we merged with Carter Jonas in 2009. We carry out a whole variety of rural professional work in the Southwest, from estate management, valuation, sales, agency of farms and land, and a whole variety of other professional work, from dispute resolution, landlord-tenant, telecoms, compensation, etc. The whole breadth of rural practice surveying that I think you would probably be reasonably familiar with. So that is me.
Thanks, James. I'm Caroline Watson. I'm a partner in the commercial dispute resolution team at Thrings. Thrings has an in-depth expertise, much like Baldwins, in the agricultural sector. Many of our specialists also have agricultural background as well. My particular expertise ranges from advising businesses in the rural economy and beyond in relation to business disputes, from contractual issues to partnership disputes, and professional negligence issues. I'm here today to talk particularly about what's going on in the insurance market, and in particular about business interruption insurance.
That's fantastic. Thank you very much, everyone. Could I ask for the first poll, please, to go out to our audience? We're going to ask everyone whether their business has been affected financially by COVID-19 to begin with, whether there's been no change or a positive or a negative impact. And while folk answering that, perhaps it'd be good just to try and look at the sort of broad financial landscape to begin with. Let me ask James to begin with, perhaps to kick this one off. James, how badly do you think the agricultural sector has been affected compared to the economy as a whole? And do you think that the level of support from the government has been sufficient so far?
Well, my impression that the pure farmer with no diversification in their business, I would suggest that quite a lot of them have been largely unaffected. In fact, probably the weather has been as big an impact on many people's lives, both through the wet winter followed by dry spring and everyone absolutely flat out trying to get crops in, and then too dry a spring and watching all the spring crops then going nowhere at all, or coming to ear at about 6 inches high. So I think there's quite a lot of straightforward farming practices, businesses have actually found themselves reasonably unaffected. However, that is not the case for all. I mean, some people, particularly if you've been supplying milk very specifically to the service or the service sector, if you like, rather than wholesale milk to supermarkets, etc., were incredibly badly affected. So I think the message is that it's very individual. I would have said, as a general rule, agriculture has been less impacted, but there are very specific impacts. And then when you get into the diversified businesses, there are businesses which have actually boomed on it, where they've been able to take advantage of direct supplies to the public and that sort of thing. And there's other businesses which have been completely flattened by it, if you're into, for example, the holiday lets, etc. And then there's a whole raft of measures in between. So it's, I think, a very varied picture, and as so often happens, you can't completely generalize.
Martin, saw you nodding in agreement to a few points there. You've got a dairy enterprise, and we'll get on to your diversified businesses in a minute, but were you one of the ones that saw prices cut quite dramatically where you are, and are they starting to come back now?
Yeah, we were actually, Andrew, and our buyer supplies the catering side of the industry. So we actually lost a month's milk check, which has in fact been recovered now, but over a period of time, because I was concerned that maybe this may continue. I did apply for a bounce back loan, and I think we're probably going to come on to these later on, but it became available on the Monday, whichever Monday that was. You lose track of time. I applied on Wednesday through my bank, and I had the money in the bank account on Saturday, which was pretty impressive, and that was £50,000, which covered 1 month's milk check. Our May and June price is hovering just above 20 pence. I'm looking at the market and hoping that we're going to recover and get back up to what was not really a very sustainable price in the first place, but something a little bit more realistic. So yes, we were hit, and it did sort of knock us for six a little bit, and took me by surprise, because I, perhaps like other suppliers, don't really know the challenges of your processor, your buyer, that they're going through. You know, if you were producing broiler chicken perhaps, and your buyer processor supplies KFC, then that's the same sort of scenario, really, isn't it? And I'm sure they suffered too. But yeah, no, I'd absolutely agree. It's very individual. My neighbour up the road doesn't supply a processor who supplies the catering trade, and you know, he's very glad he isn't.
Same products going to a different destination can sometimes make all the difference. You mentioned the bounce back loans and other support there, so let's get straight into it. Perhaps, Rob, do you want to take this one? We had the coronavirus business interruption loan scheme initially, but quite quickly the government followed this up with the bounce back loan. And am I right in saying that that's been a lot more well received in the farming community and perhaps the economy as a whole?
It's certainly a lot easier and more attainable. And as Martin alluded to, I think 3.5 hours is a record that I've heard from application to £50,000 being available to a client. So yes, the government stroke the banks got their act together eventually. As far as the civils, the 50,000 and over up to 5 million, that they're still being dealt with as a business as usual model by the banks. So they're a lot more time consuming than they go through the normal credit facilities. So if you had a genuine viable business that they would have lent money to on the 31st of December, they will still do so now. I've got a little empathy with the banks, having worked there until a couple of years ago, that they were not set up with the personnel in place to deal with a huge influx of applications from what they did have. So the pure timescales, which I've heard between 7 to 8 weeks, 4 to 6 being the normal for civils, is scary, but understandable if you do understand that the system that they have to go through. Although when it's money that you're needing to keep your business through every day, it seems like an eternity if you haven't got that money. So the bounce back loans are very, dare I say, easy to get. I'm not sure that's the correct word, but they are very attainable. My fear on that is it's not free money, and although you know it's kind of free for the first 12 months, it is a debt that you are placing on top of an existing business. Obviously, each business will have to allow for that, depending on what their financial situation is before COVID.
And I'll just follow up straight away with you there then with our first question from the audience. We have Oliver Atkinson asking, with interest rates touted to remain at 0.5% or below and potentially go negative for the next 5 years, should we be advising clients to refinance now or wait for more settled forecasts? You know, we have a lot of folk like Martin who have missed out on, you know, big checks and their cash flow forecasts are shot to bits. So what's your advice for farmers who are wondering how to structure themselves going forward in regard to that?
There's no one answer that fits all. I know from my conversations to the banks that they are already looking at their internal policies and processes. So what is their appetite going to be like in 3 months, 6 months time, 12 months time? As I think it was Martin that alluded to previous conversations, your accounts possibly in the last 3 years may look better than the accounts that are going to be covering most of the COVID period, depending again how you've been affected. We've already said some have got better accounts for it. Finances should be discussed, I'm going to say, with your bank manager or accountant on every time. And when is the right time for you to review it is such a personal thing. I don't feel I can actually answer that any better than I've just tried to now, I'm afraid. Keep communications open with your finance operators, providers.
That's fair enough. It is obviously very on a very individual basis. I can now tell you the result of that first poll. You folks were all asked whether your farm or business have been affected, and 18% of respondents say it has benefited them, the crisis so far, financially speaking, whereas 48.5% have suffered and a third have not been affected. So that does bear out what we were saying earlier about perhaps the weather having had a bigger impact for many so far. Rachel, what are the common things that you've been advising farmers on that you've met? I'm sure you've met more of those that have suffered perhaps than that have benefited so far. That's often the nature of these things, isn't it?
Yes, we spent an awful lot of time, particularly at the beginning of the lockdown, signposting clients really of where they could get support from the government. And one thing to mention when you're talking about cash flow as well is that HMRC have been really good in deferring corporation tax liabilities. They've automatically deferred the VAT payments until next year. And they've done the same with the pay as you earn as well. So if you do find that you are struggling with immediate tax liabilities, the revenue have been very good in extending deadlines for these and time to pay arrangements as well. But historically, we spent quite a lot of time advising on diversification of businesses and how to structure this for tax purposes. And like we just alluded to, some of these diversifications have really benefited. So I was talking to a client yesterday that has a farming business, but with some of the barns does dog breeding. And with the amount of people that are home now, the market for this has just gone through the roof, and they're going to have a cracking year, better than expected. I think that the main focus really now is that the core farming business is so important, and the public want local, fresh produce. So I think it's a really exciting time to be a farmer.
Well, that's fantastic optimism, and we have been hearing, obviously, at Farmers Weekly of some businesses that have benefited, particularly those who have been able to stay open, of course. For those that were shut down, and I'll come to you, Caroline, now. For those that were shut down and thought they had insurance cover, there's still a bit of a saga running here, isn't there, about whether or not they will be able to claim on their insurance. Perhaps you could just talk us through what the latest is on that, business interruption claims.
Yeah, thanks, Andrew. I think many of you will have business interruption insurance cover. Predominantly, that's usually fixed to physical damage occurring to your business premises and losses which result from that. So, for example, if you have a flood or a fire at your premises, I have to say that in the vast majority of cases, business interruption insurance won't cover COVID losses because of this link to property damage, and very standard policies won't cover you for COVID losses. However, if you have purchased policy extensions, for example, things to look out for are if you have an extension relating to a notifiable disease, or non-damage denial of access to properties, or loss of attraction clauses in your policies. These types of things you are more likely to see being able to recover for your COVID losses in relation to. There is an issue in the insurance industry at the moment in that clauses which on the face of things would be seen to be covering COVID related losses, insurers have declined to extend cover. The FCA, the Financial Conduct Authority, as insurers regulator, is bringing a test case on behalf of policyholders. It's stepping into the shoes of policyholders to try and resolve uncertainty where on the face of things it looks like the policy should extend cover, but insurers are declining it. Practically, what that means for businesses who think they might be covered but aren't, or are being told at the moment by their insurers that they are not, there's going to be a few months wait for that to come through the courts and for a final decision to be reached. An initial conclusion on the case is due probably in the first half of August, but it's likely to be subject to appeals. And will, unfortunately, in the very short term, there's many questions arising about the approach that insurers are taking in the medium term, and I'd hopefully see it in kind of the autumn. We're likely to have a more defined position available.
That seems like a good time to launch our second poll to ask you guys if you have tried to make a claim on your business interruption insurance. So we'll let that poll run for a little while, and I'll just come straight back to you, Caroline. So in practical terms then, you know, if someone has failed so far to get money that they think they're owed, you know, let's be honest, is it likely? Is it not likely? Will they be seeing a big wad of cash by the end of the year, or?
I think that a cautious approach needs to be taken. I think that even the types of clauses we're looking at here and the types of questions that the FCA have raised are things like, if a notifiable disease is occurring within a radius of your premises, are you covered? Even if the answer to that question is yes, which on the face of things it looks like it probably should be, you're still likely to fall within you will fall within the limits of your policies. So the extent of your loss that you're able to recover is still limited, even if you are covered.
Okay. We'll take another question from the audience now and go back to James while that poll is still running. Got a question from Richard B for James. What impact do you expect for there to be on office and commercial rents, given a likely increase in time spent working from home?
That's a very good question. I think we'd probably, certainly my commercial colleagues who are largely based in major metropolitan centres of London and Bristol and Birmingham and all that sort of thing, would like to know, because I think my feeling is that I think we're going to not land back in exactly the same place as we took off pre-lockdown. I, for example, been sitting here and I can work perfectly effectively, probably more effectively on occasions, sitting here in my office at home than I do have to, driving in and out of offices all across the southwest. That's not to say I don't that offices will completely go though, and at all, because I think you do need an office space to have one-to-one, face-to-face contact, particularly if you've got a team of staff that will need to be nurtured, need face-to-face contact with, particularly younger staff. And we're lucky because we've got a team of relatively stable team who can sit at home and work on their laptops and go and see clients and work pretty unsupervised. That won't be the case everywhere, and a lot of businesses will require the ability to be able to see both staff and clients face to face. However, I do think there is going to be probably a reduction in space taken by a lot of businesses for offices. The key thing in the countryside, and one of the points I suppose I could have touched on earlier, is I think a lot of commercial units in the countryside have been quite badly affected in terms of office space, rental space. It does depend entirely on what the business is. Again, it's very individual. But I think there will be a different world that we all come back to, and one can't help feeling that if the opportunity for a rent review, well, if they've got upwards only, that doesn't help, but an opportunity perhaps to break an office lease, or you're deciding to take on a new one, you're probably not going to be looking for a bigger one, that's for sure. And so one would imagine that is going to have a degree of downward pressure on rents for commercial properties, office space perhaps, although we've seen a lot of demand for industrial space, which is quite strange, I suppose, the light industrial things. So we have recently just let quite a large unit to someone who needs space to store extra PPE. So, it's very, very individual. And some businesses, some of the tenants will be really badly affected by this and may never recover, whereas others may grow and come in. But you can't imagine that this is going to increase rents. I don't think we're at that stage, and I think there will be a change. I think there'll be an environmental push as well, less driving, and all that goes alongside the sort of climate change arguments, etc. So I'm not saying that there won't be opportunities for office and commercial lets in the countryside or elsewhere, because I think there will. But I think the market, everyone's going to look quite carefully before they take on new leases, and maybe if they can get out of a lease or come up for review, they might review the space they want to take. I hope that goes some way to answering the question.
Yes, it's sort of niches within niches, and I suppose that's only a continuation of a trend within diversification that was running before coronavirus. I believe we touched on in a previous webinar. The second poll results are in now, relating back to those insurance claims. And I can reveal 0% have made a successful claim. I'm not sure how big a sample size that is, but 9.7, close to 10% have attempted to make a claim but were unsuccessful. 3% still plan to file a claim, and the remaining 87 have not and do not plan to. Caroline, are you surprised at all by those results? They sort of reflected in what you've been seeing with your clients too?
I'm a little bit surprised that no one's been successful, because certainly the information that's coming out of insurers, particularly agricultural specific insurers, is that they are paying out on some claims. So, for example, fresh raised milk claims we have seen being paid out on, and non-collection of egg claims and that type of claim. We are being told is being paid out on. I think the results probably mirror what I said about vast majority of business interruption policies weren't designed to cover this type of loss, and it's only where there are specific extensions that there is likely or could be some coverage. And I think the results probably mirror that market, or the initial insurance market to start with.
Let's go straight into our third poll then, and we'll come back in a few moments when the results are in on that. We're going to ask you now about, come back to those loan schemes and just ask if you have applied for those coronavirus, well, specifically the coronavirus business interruption loan scheme to begin with, and we'll view the results of that in a minute. Perhaps one quick follow-up then, finally, on insurance, Caroline. For businesses who, as you say, did not have those policies before, but perhaps are looking to sharpen up the wording of some of those, are those products even out there now? Can one get insurance for a pandemic at this stage, or is that completely off the books?
I don't have specific information on that, but I would anticipate it is still available, but probably just quite significantly more expensive than it was before this situation.
Yes, probably not that surprising there. Well, we've heard so far that things have been good for dog breeders and not perhaps quite so good for those with storage, rentals. Let's come back to Martin now. Martin, just tell us a bit more about your diversifications then. It's been a bit of a topsy-turvy time with your brewery, obviously with no pubs to supply, but you managed to transform the sort of sales structure of that business quite quickly, didn't you, to take advantage of the situation, perhaps it's fair to say.
Yeah, we did, Andrew. Clearly, as soon as pubs were shut, the beer sales to pubs just fell off a cliff. So that was that. I was fortunate in that the cider producer, who also contract bottles beer for myself and one or two other breweries, he emailed me and suggested that if we had any beer in cask that was unlikely to be sold to pubs due to the circumstances, that as long as it was a sufficient sort of quantity, that we could transfer that into bottles. It's possible to bottle it. So we went through what could have been quite a messy, but wasn't quite so messy operation of transferring beer from barrels into a 1,000-litre IBC and transporting it to the bottler. And 1,000 litres of what could have been beer that went down the drain came back to us in bottles with an 18-month shelf life. And obviously beer in casks, if you don't understand that, it only has a 2-month shelf life. So that was a bit of a lifesaver, but then we had to get on and sell it. The beer shop was closed initially because it had to be. It wasn't an essential retail outlet. And then because of its location in the heart of the village and folk in the village being quite nervous about outsiders coming in, we haven't felt able to open it. So we had to get rid of this beer that we had in bottles as profitably as we could. And the online sales and payment system that we already had on the website, actually we kickstarted that as my second daughter's partner who runs the beer shop. And, you know, we find that the younger element, the sort of Facebook marketing comes naturally to them. And so Matt was poking out posts on Facebook, left, right and centre, newsletters going to existing brewhouse customers, announcing home deliveries were available, and it just sort of took off from what was a relative trickle, where we were sending a few cases of beer out a week via a courier, to Matt going out 3 times a week and delivering within a 15-mile radius. So thank goodness for that, and thank goodness for Matt's input and getting these newsletters out and the message out. Of course, it may not last in quite the way that we've been experiencing it over the last 3 months. When pubs reopen, people will be going back to the pub perhaps and drinking less at home. But it's been a bit of a lifesaver, really. And we had higher sales in April and May than we've had in any April and May previously. So that was as a result of taking advantage of the online sales. And I know that's reflected by my stepbrother, who has a game business in Scotland, Wild Game. It's called Woodmill Game, and their online sales with deliveries all over the country in chilled packaging have just skyrocketed, you know, over 100% increase in no time at all. People ordering meat, venison, pheasant, all sorts for delivery to home. So, you know, I think the message is for people that have a product like ours, or like my stepbrother Stephen's, to, you know, you've just got to embrace this. You need the technology. If you don't have somebody in-house who can do it, jolly well get somebody in PDQ, because there were opportunities to sell more, or to at least sell what we wouldn't have been able to sell if it had remained in barrels. But, you know, one recognizes that it's completely different for the hospitality sector. The rural hospitality sector has obviously been hit. And, you know, you might ask, well, what's the answer for them? And there is no answer for getting back the business that they've lost over the last couple of months, since maybe they would have opened at Easter, and look at the time between Easter and where we are now, and they're still not able to open. But, you know, I'd hope that they've taken stock and been reviewing marketing. And in fact, the main thing is not to stop marketing, because people are going to be looking for places to go, staycations, they're big, or products or services that become available when restrictions come off. It not necessarily hospitality. And if you've got an email list of past customers, I do hope that you are emailing them regularly, and email newsletters, and tell them what's happening out on the farm, because this is your USP. Tell them about the lambs being turned out. Put little videos on Facebook. It's all too easy to just concentrate on what's going on the farm and be worried about the weather and think, well, we haven't got any customers, so we don't need to worry about the glamping or the camping or the other thing. But you've got to keep these customers, you've got to ring fence them and nurture them by maintaining that contact. And I'm sure everybody's been keeping the campsite up together, but it's the same for us. The approach to our farm is pretty important, and how we come across to potential customers. So the banks are trimmed, the steel fence posts on the high tensile fence are all painted in our branded colours, and signs have been replaced that were getting a little bit faded. If there was any danger of a hedge growing up around a sign, it's been trimmed. We're a business that's in business, and even if we can't welcome customers and hadn't been able to in the same way as we can normally, we've got to be there, because our competitors will, and they'll just sort of take all the cream if we're not ready to get back in and really go for it and hit the ground running. Absolutely hit the ground running as soon as we can. But there's so many things that can be done, and we've started Facebook remarketing. So if somebody visits our Barnstore website, they get these little videos popping up on Facebook afterwards. When they get indoors in the evening and they check their Facebook account, they should see a little marketing video. It's actually me waving my arms around and saying, this unit's this big and that's unit that, this sort of thing. So Facebook remarketing we've honed our Google AdWords, but it's not all about high spend stuff. It is also about the roadside signs, the banners that you can put up, the continuing sponsorship, the little parish magazine advert that maybe has got a bit tired and needs refreshing. And if we're not looking after customers on the campsite or this sort of thing, in theory, we've got a little bit more time to concentrate on all those things that will bring us back really fit. And we can never recover some of that business that we've lost, but for goodness sake, let's hope that we get everything in the future that we possibly can. And that would be my message and my approach, and my focus has been that over the last couple of months, really. So that was a bit of a ramble. I'm sorry about that.
Not at all. A lot of broad points there to take away for many diversified businesses, and I know taking those steps to do new things, even when all of the current jobs are pressing on you, can be quite difficult sometimes. So I think that's a really important take-home message there. We've concluded the third poll. Perhaps before we share the results of how many of you have applied for CBILS, let's also ask how many of you have applied for bounce back loans, and then we'll talk again a bit more about those, the contrast in them and the deadlines for them. But while we wait for that, we've got another question, this time for Rachel. Rachel, you've had a bit of a tricky question there on VAT coming, haven't you, about deferrals? Would you mind taking the lead on that one, please?
Yeah, so just to clarify, with the VAT deferrals with HMRC, it's been automatically deferred for payments due between March and June. But HMRC have always had a time to pay unit. And this is what we've been using far more frequently now for our clients to deal with VAT, but also other taxes. And with the climate as it is, and in particular in Wales, we're a little bit behind with being able to reopen at the moment. The revenue have been very flexible in allowing either a deferral for another 3 months, or if you are willing to set up a direct debit to spread your VAT payments, your corporation tax payment, whatever it may be, they are far more willing to do this at the moment. Historically, you had to go down the route of providing them with business plans or cash flow forecasts. But at the moment, with everything as it is, if you speak to your accountant, and they'll be able to speak to HMRC and see what flexibility there is there for extra deferments.
Oh, pardon me, I was muted there. Just a quick follow-up there for yourself again, Rachel. APR and BPR often debated in farming circles. What do you think they're going to do in the next couple of years, if you'd care to gaze into your crystal ball?
Well, we know that the Office of Simplification have been tasked with simplifying the tax legislation, and we know that APR is a very, very generous inheritance tax relief. We know that it is quite complicated for the amount of case law that we have surrounding this with HMRC. My crystal ball would say that if they do remove it, it would be replaced with something else, or they might make the rules slightly stricter to ensure that you are actually farming with the sole purpose of making a profit. So I don't think that it will be removed in its entirety. I just think that it will be changed. What I do think has thrown this a little bit up into the air now is the government has been generously dishing out money to help everybody through this COVID period, and they're going to have to recoup that money somehow. And I think the easy way to do that is via taxes. So I do think that's created a little bit of uncertainty about what we might see in tax legislation going forward.
If I bring you back in, Rob, it's an excellent point there by Rachel that the government has been very generous in a variety of ways, spraying money around. There's talk now of a summer budget. Perhaps there'll be a little bit more generosity from the government just to help the economy kickstart again. Is there anything in particular that you think would help farming businesses that's reasonable, would be a reasonable ask of the Chancellor, or are we already better off perhaps than many other folk already?
Trying to steer away from politics. I think it's more to do with the trade negotiations rather than COVID-19 following Brexit. I think has got more impact on the agricultural sector than what the government can do for that sector following COVID. Short but sweet, because I don't know that I've got much more to put into that without going too deep into politics. Sorry, back to you.
Not at all, not at all. We're just waiting for the results of our final poll, but let's just turn now then to these C-bills and the bounce back loans again, as I know there's been a lot of interest around them. Frankly speaking, you know, are you speaking to a lot of people or businesses who are interested in these products simply because they are there, and are there some businesses perhaps who shouldn't be looking to take on any more borrowing at the moment with, you know, challenged cash flows?
Frankly speaking, I picked up on that word. I'm not sure I can relate to speak frankly on this forum, but the CBILS, so the 50,000 and over, as I said previously, they've had to go through the normal process with all of the banks and the underwriters and their credit decision makers. So they have been given out to the the businesses, be it farming or elsewhere, that can afford them. The bounce back loans, because it is self-certified, I do have a fear factor that it's going to be self-certified mortgages revisited, and the mess that got some people into. Most people will be fine, and it will be done in a controlled manner. But unfortunately, some people I know are simply grabbing 50,000 because it's there on offer. Now, depending on what they do with it, might see that come back to bite them somewhere next year. Has that answered the question?
Yes, fair enough. I think that's a cautious warning there for folk. Just because it is on offer doesn't mean it necessarily has to be. James, diversified businesses in the Southwest, are there any particular success stories where you are? What are you hearing on the ground there? And is there anything in particular you want to share with folk around that?
I mean, success stories, there are success stories. There's a lot of farm shops in particular have become a big focal part of their local community. They've been doing sort of home deliveries. They've been providing, as I say, quite a focus for villages and the like. And I would sort of echo what Martin was saying. People who have got off their backsides, communicated with the local community, Facebook, whatever other, Instagram, Twitter, or whatever, they have really benefited from that. And I think the key, and one of the things will be, is how much of that trade can be retained after Mr. Tesco starts sort of flexing his muscles again, and we're all back to work in a more, I don't think everyone's going to be back to work in quite the same way they were, perhaps. But yeah, the reality is, how can you retain, I think that'll be a really important thing, retain the goodwill of those customers, because there's no doubt that we've all been shaken up and sorry, turn that off. We've all been sort of shaken up, and we're all landing back down. And what you want to do is to try and make sure people perhaps land back down in a different way and start to say, actually, we did appreciate that really nice meat that we were getting, rather than buying something from the supermarkets, and we like supporting that local business and all that sort of stuff. Whether we can achieve that, I don't know. But that has certainly been, some of those areas have been extremely successful, I think. That we probably focus perhaps too much on the success. There have been a lot of other people who have had a really tough time, whether that's the holiday lets or commercial lets, which basically everyone stopped paying their rent. Some residential, but my experience, I was just doing a report for some trustees on an estate I manage in the last 24 hours, and I was looking at the impact on that particular estate, and the residential impact is relatively minor. It's sort of 3 or 4% would be my anticipation for the year in reduction. Whereas on commercial units, it can be big, 50, 60, or whole chunks just gone. So that is a big dilemma. Certainly down into Cornwall and Devon, the holiday let issue is a big one. And from the 4th of July, I think we are looking to reopen. And what I hear from most people is wherever anyone can book, if you've got a holiday cottage or whatever, they're all booked up. Everything is booked up. The problem is, if we suddenly start having local lockdowns or whatever, that is the concern. And so there's a lot of concern out there, and there's a lot of people who have lost a lot of trade. But there are some businesses in the rural community, as I think reflected by your polls. I think your poll was quite interesting, that over 50% of people have either been positively affected or unaffected, but there's a big chunk, and maybe that's the audience wanting to come and listen to us, who have been affected. And I suspect they are people who have got diversified businesses which have just been closed for one reason or another. So it's tough for some people.
Well, we've got the results now of the number of people or the number of attendees certainly here with us who have applied for both types of borrowing. And for the coronavirus business interruption loan scheme, the big ones, 10% have applied and been successful. We've not had any unsuccessful applicants. Perhaps that speaks to the fact that there are more hurdles to jump through, so they've been very careful with their applications. 10% still planning to apply, and the remaining 79% not choosing to. And then perhaps interestingly, given the lower bar for bounce-back loans, just 6.9% have applied and been successful for bounce-back, with another 6.9% planning to apply and the remainder not planning to. Let's see. Rob, there's still plenty of time to apply for these schemes then, is there? There's no danger of any windows banging shut, just briefly?
Not that we're aware of. When they were originally brought out by the government, there was a 6-month window put on them. I did look all through their guidelines only a couple of weeks ago when somebody else asked me this, and I think all the end dates have been removed because it's kind of watch this space. How long is COVID going to go on? How long is it going to affect? Having spoken to some of my colleagues within the financial sector, they are anticipating it to be October, November, but there is no set date yet. So we certainly don't think it's going to be shut in the near future. When I'm saying that, I'm guessing 3 months, but obviously at some stage it will become null and void. Well, we certainly hope it will anyway. I'm quite amazed by some of them stats on them too. It's quite interesting, as much as I've got stats from the government and the British Business Bank about how many CBILS and bounce-back loans have been applied for, but they don't refer to the ag sector market specifically. But for nobody having applied and been unsuccessful for the CBILS, when only just over 50% of the applicants are successful, is quite an astonishing fact for, I know it's only our audience for here, so you know, I'm guessing we've obviously got some very good clients on the webinar.
Absolutely, and we've got time running out fast now, I'm afraid, as we have to finish at 6 p.m. So I'm going to finish with a little test for our panelists. Perhaps each of them, in the same order as they introduce themselves, in as few words as possible. Our final question from Roddy McLean: to make businesses more resilient when we're out of coronavirus, what would be your one key thought as to where management should focus now? Let's start with you then, Rob.
Thank you, Roddy. Focusing on the cash flow, simply on cash flow, and making sure you're not wasting any cash flow straight now. And so cash flow budgets, I guess, is where I'd be going with that. Full stop.
I think if you're one of those businesses that's doing really well, tax planning, I think that's always something that's really important.
I'd say just get damn good at marketing and get some help if you need some help. Mentoring, advisors, you know, get good at it.
Thank you, Martin. I would agree. I think that embracing modern technology and all that can bring is going to be really important. You can't sit there as a Luddite and say, I don't know how to operate modern technology.
Thanks, James. I'd say really get to know your customers, know exactly what they want, know what they need, and make sure you meet those needs and adapt to them as and when you need to.
Thank you all very much. You all responded very well under pressure there. As I said at the beginning, if you want to listen back to any of this or share it with someone who wasn't listening, you will be getting a copy of this in your inbox, I think, within the next 24 hours. So it only remains for me to thank each of our panellists for this evening: Rob Buse, Rachel Ball, Martin Baisley, Caroline Watson, and James Stephen. And don't forget, if you want to stay up to date with obviously all the latest on the legislation, schemes, tax and planning, all of it is new content every day on the Farmers Weekly website, fwy.co.uk. And for the football fans among you, it's not long till kick-off now. Sport is finally back, so you'll be glad to sign off and go and put the big screen on. Thanks very much for attending, everyone. It's been really enjoyable. Thank you.